have a brand new trading account that I've funded with $50,000 and I'm turning that into an income stream that I can potentially live off of. I am showing you every move I make inside this account. So today is an overview of the income that I've earned, how I'm structuring this account, as well as the one stock that I am eyeing off over the coming week as my next buy into this account. So let's go over things. We'll start by looking at last week's trades, how I'm structuring this portfolio, and then of course the stock that I'm eyeing off for the coming week. Now, of course, this is not financial advice. This is simply what I'm doing and have done based on my individual goals and risk profile. Do not blindly copy strangers on the internet. Do your own research, make your own decisions, get good at managing your own money. So let's start by looking at last week's trades. So last week I closed out a trade on GLW. I'd bought shares, I had my covered call, and of course those shares were subsequently called away at a total profit of $384. I had a trade on Hood. I've closed part of it I still have open. So the profit on that so far is $93. I closed trades on Nvidia and First Solar at $59 and $42 respectively. I covered call on Credo for $319. I covered call on Silver for $388. And of course, I still own these shares. So my week's income for last week was $1,285. I also on Friday sold covered calls again against Credo and Silver. So I already have earned for this coming week a minimum of $633 before I do anything else. Now, I went for the same strikes on these two stocks that I had last week. Do I expect them to be hit? No. So my plan is if we continue to get some downward movement, I can take profit on these covered calls early and then just redeploy a new contract for some additional income. There's other contracts that I still have open. I'll do a different video to cover what else I have open. But as far as this week goes, I've only got the two so far due to expire, the two covered calls. Now, the structure of this account, I'm putting no more than $5,000 towards credit spreads. The balance will be mainly on covered calls, the occasional cash secured put, and random leaps. Now, I don't mean random as in we just randomly buy them. I mean random as in sprinkled in when the market deems it's good time to buy leaps. Now, above anything else, this is an income account, and my goal is to collect a minimum of $850 each and every week. That number's not random. That number is my rent. I won't be taking funds out of this account, but I want to show you that you can generate a reasonable amount of income from what someone would, describe as a relatively small account. Now, let's talk risk management. So as far as position size goes, I've allowed 5,000 for spreads, and I'll only ever do one spread per ticker. So I won't be doing multiple contracts over one ticker. I like to spread them out. I also won't have all 5,000 deployed at any one given time. Spreads are very much as deemed safe in the market. Now, position size for stock holdings. When I created my first trading account, I had limited funds. And you hear the instruction and the guidance of do not put any more than 10% of your funds into one ticker. Well, that didn't end so well. And the reason being is that it only leaves low value stocks. So I could only have $5,000 in any one given stock on this account if I was creating like those same rules. And low value often equals higher risk. I would rather higher value and fewer positions in this account. So for this account, I've decided that $130 share price is my maximum position size. Okay. I'll only be taking quality companies that I've researched. That was another mistake I've made in past portfolios is just, you hear online, you hear on YouTube, someone says it's a good idea and you buy it because it's a good idea. No, only quality companies, only those I've researched, differing sectors. So even though potentially AI is the hottest thing right now, I'm not going all in on AI plays. But above all, it must also have an extensive options chain. And by extensive, I mean contracts spread across a wide range of strike prices, because that way I can still collect premium even if the underlying drops without having to sell calls below my purchase price. If I need to, I will sell calls below my purchase price, but I have the strategy of when to do that, of how to do that, and how to manage that so that I don't get into a position where my shares end up called away at a loss. That is for another day though. So current positions, we've covered off. I've got closing this week, my Credo and my silver covered calls. So far for this week, if nothing else, I've got a total of $633 worth of income in this account. And what am I watching this week? My number one is Shopify. I want to take you through the research that I've done on this company, because I think that sometimes we just blindly go into things without thinking them through all the way. So let me show you why I'm looking at Shopify and then at what price point I like Shopify. First reason is diversified risk. So Shopify, as of November of last year, has 6.5 million active stores. What does that mean? They got 6.5 million customers. One stock that I was looking to research was Iron, and I'm still watching Iron, but do you know how many customers they have? One. Now, granted, there's more in the wings, and they've got a few customers that they haven't yet disclosed the names of, but ultimately their largest customer is Microsoft. So majority of their revenue is on the head of one customer. I love this. Two things I love about it. Number one, the growing use. So from 2020 to 2025, we've jumped from 1.7 million merchants to 6.5 million. Tick. We got 6.5 million customers to keep the revenue from this business from just dropping overnight. That to me is diversified risk and security. The next is that record numbers are being produced year after year. So this is straight off of Shopify's news release site. Black Friday, Cyber Monday by the numbers. 14.6 billion in global sales from merchants, a 27% increase in sales from 2024. That's big. 81 million consumers worldwide bought from Shopify-powered brands. More than 94,900 merchants had their highest selling day ever on Shopify. And down the bottom here, this is interesting to me, 39% year-over-year increase in sales made via ShopPay. Now, one of the reasons why Shopify interests me so much is I built a business on Shopify to 7 figures, and I since sold that business. One thing I know about the Shopify platform is it's sticky. Once you're on the platform, it is hard to move your business. You don't just close down and open up on another hosted website overnight. It doesn't work that way. And ShopPay is keeping that stickiness. So what's ShopPay doing? ShopPay makes it easy for merchants because you pay, or you can receive payments from your customers from Shopify. That means that you don't need an external Stripe connection or external buy now, pay later connections. So especially this buy now, pay later via Shopify. When I had my business, month to month, about 30% of my customers would use Afterpay. Afterpay charge 6%, 6 to 10, depending on your business. And now Shopify has this ability. So they have just taken all of this revenue that was going to an external merchant and they've brought it in-house. They're using, I forget who I want to say, Affirm or Klarna. They're using one of them in the background. However, of course, they've absolutely got to deal with them where they are getting a good chunk of that fee. So I love that. I love how they make their money. They make their money, again, diversified. Yes, of course, the subscriptions that the merchant pays, payment processing, shipping. They take a cut off of the shipping if you use Shopify shipping. Apps. If you have a Shopify store, you've probably got 3, 4, 5 different apps running in the background. They're making money off of that. And lending. One of the biggest issues with having a physical product business is you've never got enough damn money to buy the product. Shopify has their own lending service. So they have their hands in every aspect of your business. It's sticky. You are not going to leave them. Now, what about when we hit a recession? This is something else that I was thinking through. You know, everyone's talking about recession's going to be here soon, cost of living, it's a crisis, all of this sort of stuff. Well, let's think that through. Let's put some logic on that, right? So what about when we hit a recession? Well, what I think is going to be interesting next recession we haven't yet had one in the online era. So we haven't had a recession post 2020. 2020 is the line in the sand of we now do most business online. That was when so many businesses closed in real life, opened online. We had the biggest spike in business online in 2020. And we haven't had a recession since then. But what typically happens in a recession? Number one, we know businesses shut down, okay? And they look to get rid of their largest expense. So before they shut the doors completely, put up the closed for good sign, they'll look to get rid of their largest expenses, rent and staff. So staff get laid off, and rent now. If you have a business that sells things and stuff, shut up shop, bring it online. But let's first look at if the business shuts down. There's not a job, right? The business closed down, all of the employees are unemployed. What do? They start their own business. Where do they start it? Online. And we can see that small startup and personal businesses tend to surge during or immediately following a recession. It's the necessity. I don't have a job. I can't get a job. No one's hiring. I've got to create my own. Necessity entrepreneurship. When did we see the biggest surge of this? During COVID. No one had a job. We all looked online to create a business. So that'll be step one. The business shuts down. More people will start an online business. Where do they go? Shopify. And then if a business gets rid of their largest expense, they get rid of the storefront that they're operating out of, they might want to stay open. Maybe they can afford to stay open without the $50,000 a year rent. They move online. Where do they go? Shopify. Now, the other thing to consider is that people talk about cost of living crisis, at least here in Australia. That's all you ever hear. Cost of living crisis, everything's so expensive, no one's spending. Well, we've just proven, based on the numbers, that we are still spending. Why? Because above anything, we have a consumerism crisis. Society is addicted to stuff, and Shopify helps businesses sell stuff to their addicts. So what will we give up when we don't have the funds coming in? Large holidays, large luxury purchases, getting our hair and our nails done. But what do we keep buying? Stuff. There's a fascinating study out there. It's called the lipstick effect. If you want to go and have a look at it, go search it. Basically what it says is that during times of recession, people give up these things, the extravagant purchases, and instead they buy things that are small in value. They buy stuff that makes them feel good, i.e. lipstick. So lipstick sales surge during recessions. Large holidays, large luxury, new car, new furniture maybe for the house, all of that drops. But the stuff, the consumerism addiction keeps going. Now, I want to show you in the chart and show you what price level I'm looking at. That's why I love Shopify. So do I think we've got more downside from here? Probably. Do I think that in the long term, this is a very solid company? Absolutely. So let's come into the chart and we will have a look at what levels I'm eyeing off there. So here we are inside of the chart for Shopify. Now, we have had quite a dramatic drop. So at all-time highs, we got up to, call it 180. As of close of business Friday, we are down to 130. Now, when I'm looking at this chart, I can't help but think that we have possibly just created this tiny little bear flag. If that's the case, and we've broken the 200 moving average, if this is a bear flag, then worst case scenario, we are probably heading back down around this, call it 110, 115 area. If we get down to there, I will absolutely be a buyer of this stock. I will get my position, I will buy my 100 shares, and I will start selling covered calls. So that's what I'm looking for, number one. Number two will be earnings. So if we get down to here before earnings, I will buy no matter what. Okay. If earnings come in and they're amazing, which I anticipate they will be, there's no good reason for poor earnings off of the back of just having the largest quarter in history. So I expect good earnings. The question is, how does the market respond to those earnings? So I plan to wait. If we don't get back down here, I plan to wait for earnings and trade the response. Do we get more of a flash down? Do we then start trending back up and towards these all-time highs? So that's what I'm looking at for Shopify. Interestingly, on the weekly chart, we have just, let me get rid of my little channel. We ticked or kissed at the 50 moving average on the weekly chart. So this also could be a place for a bounce, but it also could obviously fail and be give us a bit more downside. So that is my number one pick for this coming week. We will see how it plays out. But I think the important thing for me in this account in particular is that there are quality stocks in the account. So that's what I'm aiming for. Shopify also gives me a bit of diversity away from just AI plays. So at the moment, we've got Silver, we've got Credo, and now we've got Shopify. So, well, potentially we will have Shopify. So if this eventuates, I think that that's a nice balance in that portfolio to get us started. But obviously, time will tell. I might not get into Shopify anytime soon. It might be another stock, but this is just my thought process of what I'm looking for and why. So if you're not already following along, subscribe to the channel. I will do an update on this account each week so you can see week to week how much income I'm creating. And that's the important part for this account as well, is that this is about income generation above and beyond anything else. So let's see where we can take it.